All right. Well, hello and good morning, and welcome to our Simply Tax Talks for January 25th. It's I guess, a special edition, if you will. It's officially now the tax filing season, and I guess depending on whether you're a tax professional or maybe even as a tax payer, even that sometimes just the thought of that can elicit some strong feelings and maybe some worry and concern about what's maybe ahead. It's been the third season now. It'll be marking with the pandemic, and that's just meant a lot of different things and created some challenges for the IRS, for tax practitioners, and for taxpayers. And so we're going to be talking about some of those today, and of course, getting our updates on what's happening in Washington and maybe where it's going. But also excited to say that we have joining with us today one of our senior campus recruiters, Matt Geyer, from Chicago, that's going to be joining us and sharing a little bit about the insights that he's seeing for those coming into the profession. You know, staffing has just been such a challenge for the accounting profession, but really businesses in general. The clients and taxpayers I work with personally, that's a common conversation around some of the challenges that they're facing. So I'm excited to have Matt join Yelena and Tad from our national tax group. So good morning to everybody, and glad you could all be here. We're going to jump on into our top takes for today. All right, top tax topics. We would be remiss if we didn't start with the one that, Yelena, you know which direction I'm going to go here, the BBB and what happened. I know last week we had questions about whether or not the BBB was meant to be. And so what did we learn in the last week?
Yeah, so it kind of took an interesting turn because Biden acknowledged last week that the BBB in its current form probably won't survive, but he did open the door to passing legislation piecemeal or in a scale back version. So that means if anything passes, it'll probably look quite different from what we've seen so far. Senator Bernie Sanders is echoing kind of a similar message, but he's telling Democrats to bring portions of the BBB to the floor for a vote, requiring senators to publicly acknowledge whether they support each issue versus passing a giant bill. So the thought behind this is that there are certain provisions in the BBB that have 50 votes needed, allegedly, including Manchin's. So it's better to pass those, I guess, stronger provisions that have this support before midterms this year, just to get things done instead of trying to work on a bigger bill that doesn't have the 50 votes needed in the Senate to pass something. So we don't really know which provisions have the best chance of survival, but there's a couple provisions that Manchin has expressed support for and Democrats in general appear to support. So you have the climate provision. The BBB included $500 billion in climate funding, which is mostly energy tax credits and the electric car credit. Manchin has expressed some concern over the amounts and the limits of the credits, but overall it seems to support some kind of climate provisions being passed. The funding for childcare and preschool also seems to have popular political support, both in the House and the Senate, although Manchin doesn't like their temporary programs because they have sunset dates to make the cost work for purposes of the conciliation process. So if that is included, it would probably be changed a little bit to address Manchin's concerns. Then you have the Democrats in high tax states who continue to say they will not vote for anything that does not include a salt fix. So they kind of have this like no salt cap, no vote kind of going. And then everyone seems to support lower drug pricing, although again, Manchin wants to see that expanded a little bit more to include a wider array of drugs, so kind of expand that provision into something more. Another surprising turn this week was that the House Ways and Means Committee, which is mostly Brady and Chairman Neal speaking out right now, saying that they want to come across the aisle and work together to pass a sequel to the Secure Act. The Secure Act was passed the end of 2019 and included retirement savings provisions. So this would be like a Secure Act 2.0. And as of now, we don't have bill language or anything, but according to Brady and Neal, would require probably automatic enrollment in 401k and 403b plans, make it easier for smaller employers to offer pension plans, and then establish a national online database of retirement plans. So again, this is kind of taking something that was maybe could have been included in the BBB and taking it as a separate piece of legislation. So that was something new that came out last week as the BBB kind of gets split up into pieces.
Yeah, and maybe Ted, I'll ask you this. Kind of what your thoughts are here. I mean, you were one that was sort of saying you didn't think necessarily that it was gonna happen at the end of last year. Clearly, it didn't. So we're taking this piecemeal approach. Maybe. What are your thoughts?
Hey, I mean, it's what we've been saying, or I've been saying all along on this stuff is that it ain't going to happen. I mean, we keep talking about this thing, and it's kind of get tired of hearing B, and because again, we just keep kicking this can down the road, and you listen to the provisions now. They talk about piecemeal, and I mean, it's virtually nothing, relating to tax side of this thing. When you look at it, so you think about where we started this damn thing out, with the Ways and Means Committee proposal, which is like, blew up the code. I mean, it had all of us running for cover and trying to, do all these transactions before things got passed. And it comes down to, it's a whimper, if anything, that we end up having in this thing. So again, it's, I'm not going to say I'm disappointed by it, but again, it just shows how sometimes we're kind of looking for pretty much anything that we can, to emphasize, that we're going to have a change coming down the road, or we have to, look for this or look for that. But again, I haven't changed my view on this thing a bit, that there's nothing going to happen with this thing. I mean, yeah, you might get some electric car credits or whatever we're going to get out of this thing, but you take a look at what's in there, and even if the full BBB got passed the way it was, there really wasn't that substantial tax items in there. And now they're talking about piecemeal, and it's mostly on the spending side. So again, I think at some point in time, it's just, this thing's done. But I don't know, it keeps getting pressed out there, and so because it's getting pressed, and we need to kind of stay on top of what's happening. And thank God we got Elaine out there doing that. So
yeah, no kidding. I appreciate it. And that's again the whole genesis of these talks that we're doing, is to be able to share that, because it is, like you said, it's shifted so dramatically, right? And to figure out what does that mean, and it creates uncertainty, obviously, even just having some of these proposals and provisions out there. But maybe I'll pivot over to the start of the tax season, and officially, I guess yesterday marked that, with the IRS now accepting electronically filed returns. So that's always kind of the big, I guess, headline in the articles all start coming out around what to expect. But the big one this year really maybe goes back to a recent report that was highlighting some of the challenges the IRS has from the National Taxpayer Advocate. So, Elena, can you walk us through some of those? Maybe some of the top challenges that the IRS is facing that was covered in that report?
Yeah, so we have actually a thoughtware alert coming out shortly with more detail on what the report included, but basically outlined 10 main problems that the National Taxpayer Advocate found with the IRS processes and kind of procedures in the last year, and also offered solutions. Not surprisingly, the solutions, almost all of them, include more funding and more people. And as we go through some of these problems, you'll see why that's the answer. But overall, the IRS had a significant backlog for processing returns, especially paper ones. I think the report called it that paper is the IRS's kryptonite, and it's surrounded by it. So as of December, the agency had a backlog of 2020 returns, sitting at 6.7 million for individual returns and 2.6 million unprocessed amended individual returns. And that's just like individual returns. That's not including any of the payroll forms or any other kind of notices or anything the IRS has to process. This means, of course, that if you have process delays, you also have a refund delay, which is what you've probably been seeing in the news, because that's where it hit like constituents of the senators or representatives in Congress. This is where it hits close to home, where you're into 2022 and you still haven't received your 2020 refund. So this is something that the senators and representatives are picking up and saying, hey, IRS, you need to get up of this and process that backlog. And it's interesting because we're starting a new tax season, technically not finishing our last tax season. So kind of look to the IRS to maybe continue to have this problem in the coming year. Another problem they had was telephone service was at its worst. In 2021, the IRS received 282 million telephone calls, and they answered 11% of those, which does not look good. And the IRS encouraged people to look online and use the Where's My Refund online portal. to kind of maybe decrease the number of calls. But unfortunately, the portal is not helpful because a lot of times it just say processing or not processed and not give you any type of further information. So people would end up calling the IRS anyway. And then also the issue of notices. The IRS sent millions of notices to taxpayers in 21, but it took the IRS months to process and respond. So I think the report said that it took about 6 months at least to process notices. A lot of the notices required taxpayers to respond. So if a taxpayer responded, but the IRS is still processing initial notices, it was delayed in processing the responses, which sometimes would either refund delays even more, or it would automate adverse actions against the taxpayers, like sending issues to collections early on, even though the IRS had responded, or the taxpayer had responded to the IRS. The IRS just didn't process the response. And so you kind of add all of this, and of course that leads to recommendations by the National Taxpayer Advocate that the IRS needs more funding and more people. And so you also hear a lot of news clips right now from senators and representatives saying, this is an issue. The IRS funding should be something that is passed maybe individually. It was in the BBB, but maybe passed individually to help kind of, as we go to next tax season, to kind of help alleviate some of these problems.
Yeah. So, Ted, I'll ask a question to you just to see if you know the thoughts off the top here, or the direction here. And that's really to maybe the ERC and processing those claims. Obviously the IRS is backlogged, and I like that kryptonite term there, Yelena, and some of the challenges there and focusing on the individual side. But what are you seeing and hearing from that front? Because I'm getting that question quite a bit from those that are maybe had filed amended payroll tax returns and are waiting for those refunds to come out. Any updates from your end?
Yeah, I mean, not really. We're still having maybe sporadic. You're seeing a couple of them come through now, of the 2020 refunds, coming through. But, I don't know that I've gotten anybody who has filed an amended 2021 941. Now, again, amended, not filed as part of the original 941s. Those would seem to be processed, fairly in fairly good order. But, any amended ones, we really haven't been seeing anything come back yet. Even back to 2020, sporadically we get a client that says, they got a check or something like that, but and they're still going to get inundated. And I think, Yelena, I believe you had a link to an IRS notice about the 7200s that, don't expect anything till the end of January, I think they said, in that notice.
Yeah. So he just kind of playing the waiting game. We're back at that, right, Ted?
Yeah. So again, it's more of an issue of, don't let that stop you from filing if you think you have a valid, ERC claim out there. But again, just don't expect to, receive a check, in, a month or 2 months, from when you actually file it. So it's a difficult situation, and unfortunately it is a paper filed form. And again, more paper, the more backlog that they're going to have with those things. So it's a tough situation because that was the purpose of the retention credit, was to get cash into the hands of the employers who qualified for it, and here they're sitting and waiting for the money. So eventually it will come.
And probably a good overall general reminder too of, just trying to, and of course this is one where you couldn't, but where possible, avoiding that paper and avoiding and utilizing electronic filing, electronic payment options just to avoid some of those notices. Just speaking from firsthand experience with clients when there's been issues, it generally has some form of paper and, check being sent in the mail as a common denominator there.
But some of that, Damien, I do have to push back a bit because, sure, in our practice, what we have here, we have a lot of clients who have fairly substantial returns. And one of the things that's out there is that there are certain limits on what 1040s can be e-filed. For example, in 2020 filing season, if you had more than 45 rental properties, you couldn't e-file. You had to file a paper return. I mean, we had one here that literally, this return was probably 1.5 feet thick that we had to paper file. And we had to paper file that return back in 2019. And, the taxpayer had a substantial refund coming. We still haven't gotten it. We're 1.5 years out from when that return was filed because we had to paper file it. So, I mean, it's a little bit of their own limitations in there, in that some of these larger returns, and I haven't checked this year to see if they still have the same limitations, but for the 2021 filing season. But I mean, it's ludicrous when you have to send a box, with the return, and you literally FedEx it out to the filing site, because you want to make damn sure that you have a record of them receiving it. So especially in the prior year, in the 2021 or 2020 filing, we had a check that went in with it for a large dollar amount, and I haven't looked to see whether it cleared the taxpayer's bank account yet. But it's a bit ridiculous, and like I said, a bit of it is self-imposed.
Yeah. I will say from my experience, it seems that sometimes the returns sit in the trailer or whatever, or wherever they're waiting. But those checks, they do seem to manage to catch those on the quicker side. So
yeah, they do. Damien, let me go back for a minute on a couple things on the Paycheck Protection Program and ERC, which hopefully this will be the final year for paycheck protection, but I'm sure there's still some out there that haven't been forgiven. But as you're going through and speaking mainly to a lot of the BKD preparers out there, watch on the PPP stuff, because remember, there are three revenue procedures that were issued earlier this year, 21, 48, 49, and 50, that really gave a lot of flexibility as to when to report, the non-taxable portion and the basis increase related to the debt forgiveness. So, don't just mail that in. There may be some benefits of going back and doing amended returns, and for 2020 or running it through 2021. But take a look at those things if you do have some PPP stuff. And the other one are the retention credits. I think we're going to miss some of this. We have a number of clients who, for one reason or another, are filing their retention credit applications now for 2020 or even 2021. But remember that if you do that and go back and file for 2020, we technically have to go back and amend those 2020 returns, to disallow the wages under from the retention credit. So be careful of that, and also be careful of 2021 amendeds that were filed for the retention credit, or just in the regular due course, if they haven't gotten a refund yet, that those refunds are actually accrued. And if they're not accrued, that you have an M1 adjustment for those things, because they are taxable. And a lot of clients are not putting them on the books, for maybe a couple of reasons. Maybe they're audited and there's not 100%, or they're not totally comfortable that they're actually entitled to it, but they filed for it. But if they file for it, we're going to have to pick that up as a non-deductible expense on the 2021 return. So got to be a question out there that we ask, have you filed for any retention credits? So just something I think that we're going to probably miss more than we may think that we're going to miss.
Yeah, and I'll tell you, it's been uncomfortable and unpopular conversations I've had with those maybe that were able to take advantage of the ERC in a very big way. And obviously, like you said, can still do that, but then it has the implication on the year that in question, so the 2021, right? But to not yet have the dollars yet, because they were filed on amended payroll tax returns, but then yet, maybe potentially having to write the check for the tax balance that's due coming up here, or estimated payments impact, So there is an interesting play on the cash flow, to your point earlier. It's almost a kind of going the opposite direction of what the intention was.
Right.
Yeah.
So anyway, just keep your eyes open on those things, and maybe, God forbid, we need another question on a checklist, but just something to ask about retention credits. Because again, if they got them, they're going to be big numbers, relatively speaking, related to the taxpayer. I mean, they will be big numbers. So
yeah. It's a great opportunity, and it's still, like you said, it's still out there and still can look for it, but you have to kind of think through what that means for your tax return and proactively be sharing that. I guess even if you are someone that got it, make sure that it's addressed on your return, because otherwise you're looking at amended returns, and you don't want to go down that road if you can avoid it.
Amen.
Well, Yelena, I have one other popular question I've been getting lately, because you're talking about some of the resource challenges with the IRS. Any chance that the deadline gets pushed back again this year?
As of now, no. So the IRS commissioner actually held a press yesterday, and he was asked that. And he said that as of right now, there's no intent to extend the deadline. But the IRS and Treasury are going to monitor the progress of the filings and continue to take advice from various professional tax organizations. So they're kind of saying, as of now, no, but that's not a no, never. It's a no or monitor situation. So I guess we'll see.
All right. Well, good to know. Well, because I was saying it's a kickoff to tax season here, and sharing that, people, it is, and I had a mentor that told me that, people is the most important part of the job in public accounting. And that's true of I would say almost all organizations, but can probably make that statement. And so, there's many people right now looking for, people and retaining people. And so that's part of the reason why we had Matt Geyer join us here. So I guess, Matt, I'm going to kick it over to you and just kind of ask what you're hearing, what trends you're hearing out there, particularly from those that are looking to maybe enter the tax profession. We'll use, obviously we can talk about tax and accounting from our perspective and share our experience, but I think it probably has broader applications and implications as well. So yeah, what are you seeing, Matt?
Yeah. So thanks, Damien. There's no secret. It's a really hot market out there. My work is kind of identifying talent on the internship side, as long with the first year associate side. And, I think it really boils down to three areas that students, regardless of whether they're coming from large institutions, small institutions, across the United States, they're really looking at three unique areas as far as what students are looking at from an internship or an associate role. First is they're looking at that diverse experiential component. I know, Damien, you mentioned a mentor who was really impactful for you, and I think students are really looking at seeking out what that person could look like for them when they enter into a work environment, and that also means working with a variety of team members, not just individuals who are, around their same experience level or age group. They're looking at seeking out a variety of experiences from that perspective. And then I think the second thing is, students have been in this virtual environment for the past 2 years, and I think they're really looking at seeking a way to, refine their soft skills. And this could mean everything from, communication with, writing an email or connecting with individuals within the office, but also understanding what it's like to present or provide feedback, and actually listen to feedback from, really day one when they start. And then the third thing that I think is really interesting from students, and this, we collect a lot of data on individuals who come into our offices from that first week, and really collect from the sense of what are they really excited about learning, and they are really curious about understanding how do they know when they're doing something well. And I think they really are interested in understanding, when times get tough or when times get, understanding from the perspective of, what to make of this experience. Who can they lean on to from the mentor side or from a coach side to understand, hey, this is how you can really refine your expertise in public accounting. Here's how you're going to go about that. And also, what is it like to understand how I can improve on things that I'm already good at, and really make sure that I'm making a point to understand those well. So I think those are the three areas, like I said, regardless of where students are coming from higher education, they're really looking at from the internship or the associate side.
Yeah. Matt, I'm going to ask you one that's kind of for me, maybe even just for my own personal, and I think we've had conversations, you and I, around this road before, but, if I'm trying to be a good mentor to a candidate, to someone new to the profession, any tips or advice you'd have for me on doing that effectively, particularly given, you heard us talking about all these things going on with the IRS and some of the challenges of the season. It's going to be a busy one. Pun intended with busy season, right? But yeah, how can I be a good mentor even amidst a busy time?
Yeah, I love that question, Damien, because I think it really boils down to being a great mentor. I think starts and begins with being vulnerable with yourself. And I think understanding that at a particular time in your life, you are in many times an intern or somebody who just started in a new experience or an environment that was maybe uncomfortable or maybe something that you weren't necessarily sure of. And I think if you can relay that in a way that allows you to break that barrier between you and the coachee, if you will, it will, I think, allow for better trust being built between that relationship. And then I think it'll also allow for that individual who's an intern or an associate to disclose what they're experiencing and, allow you to really triage some of those immediate concerns that may occur that first week on the job or even 6 months into your experience, and then eventually serve as a guide going forward. So I think if you're willing to be vulnerable with yourself and sharing what your experience was like, positive, negative, and everything in between, you can allow for a greater understanding from that mentorship relationship.
I love that. That's really good advice. I do that when I'm at my best sometimes, Matt, but sometimes it just takes you to remind yourself, to really be that and share those experiences and that it's valuable to others. It's kind of almost like, I had an undergraduate class with it was like an Econ 101 class, but then the instructor was, probably used to doing, very extensive, heavy graduate level research. And it was almost hard to like bridge the gap between that and Econ 101 because you're kind of further down the road on your career journey. You've got to back up and share those vulnerabilities.
Right.
But Matt, I am curious, what's the marketplace looking like right now? Maybe again specific to tax and accounting in the profession.
Sure. So like I mentioned, we know as recruiters, whether you're on, looking for interns or associates or even experienced hire recruiters, it is a hot and competitive market. It's no secret that literature from CPA societies as well as NASBA have showcased that there's a significant declining student enrollment in the area of accounting. I think you have to really look at yourself as a recruiter, not as somebody who's simply understanding what requisitions you need to fill or what your target hires look like from a calendar perspective. It's really looking at how do you answer to those changing demographics and the changing funnel? And that I think really lies in how are you tapping into, new or emerging populations that maybe haven't ever considered public accounting as a profession. And I think if you're able to tap into that perspective, again, going back, like I said, Damien, to showcase those vulnerabilities and understand that, it's okay maybe not to know what you're passionate about at this point in your life, but here's a path or here's an opportunity that could be exciting for somebody who is passionate in, problem solving and understanding what it's like to serve others. I think that's a better way to position the question about understanding the marketplace and then ultimately responding to the changing demographics of what, our pipeline looks like presently.
Yeah. All right. So one last question for you here before we wrap up. And I guess that's, what are some frequently asked questions you get? One or two. I imagine you probably get a number. Again, people have a lot of questions, hopefully they're asking them. But what are some of them?
Yeah. So I think it really boils down to, one major question that I get really from students of all ages. And I think when I'm really looking at trying to select and secure the best talent for any position, I think whether it's an internship or an associate role, I think folks know kind of what the role or the expectations of that position is already. But I think you have to take a step back and look at, what types of experiences go beyond what you're actually experiencing. How are you going to be networking with others really from the get-go? And how are you going to understand that, once you start your career as an intern or as an associate, how will you be able to meet professionals to help kind of refine what area of tax you're really interested in? Or how do you know that this niche is something that you're really passionate about at year 3 or at year 5? I think it's tapping into those narratives, especially looking at some of the professionals within your organization and figuring out, hey, sharing these stories and vulnerabilities, like I said, allows students to kind of think for themselves and say, oh yeah, by this period or by this point in my career, I want to have these type of experiences that will complement what my role looks like presently. So this is why I'm ultimately choosing, this firm. And I think answering that question, allows folks to understand that this is a great long-term play for me.
Yeah. No, great stuff, Matt. I really appreciate it. I feel like I want to keep the conversation going here. So we're going to have to find another outlet, another platform here to keep the conversation going. We'll put your contact info in the chat here and make sure that people can reach out to you as well. But you've been such a great resource to me, even just with the advice there. So thank you, Matt. I really, really, truly mean that and appreciate it. So as we usually wrap up here, we get our top takeaways. So let's wrap up our conversation for today with that. All right. Well, our usual question here at the end, Ted and Yelena, has been, when do you think we're going to see this BBB, and when will it be enacted? Will it be enacted before Christmas? Well, we're well past that. So now I think what I want to know from you each, and this is just obviously your take, right? Your position is, what are the odds, or do you think we'll see some of those provisions that we saw in the BBB, if it gets piecemealed out here, that have retroactive effective dates? Do you think we'll see them? Yes or no? Yelena, let's start with you.
I think the salt cap is the potential one because that's a big one politically.
Yeah.
And it makes sense to have it at the end of a year. So that's probably the only one that I could maybe see retroactive being effective. But everything else, I think, is just going to get scrapped and rewritten if anything passes.
Okay. All right. How about you, Ted? What's your take on it?
I don't think you're going to see anything like that at all.
Okay.
Like I said before in my initial rant, I just don't think anything's going to happen with it. Anything of any substance or any real import to, our clients. I just don't think it's going to be out there. Maybe child credit, but again, I don't think that one has a snowball's chance in hell of getting through. So of the top, 10 things on my worry list, this doesn't even come close.
Okay. Well, that's good to know, and again, back to what you made a comment earlier on, Ted, right? I mean, from where we started to where we are today, I mean, it's actually a much better picture from a taxpayer that was concerned about tax rates and things going up, maybe, right?
It was Armageddon before, and now it's like, kind of like the market reversal yesterday.
Yep. You kind of a little blip and pop up, and it's a roller coaster. Maybe that's a good metaphor. We need like a chart that graphs how all these tax things are going, and maybe it measures the sentiment and the emotion and the how the tax practitioners are doing. Perhaps, I don't know. But all right. Well, as always, I greatly appreciate your vantage points, Ted and Yelena. You've been very helpful. We get a lot of great feedback from everybody on just the value you provide in sharing that. So thank you as always. We'll be back again next week, same time, same place. You know where to find us. Make sure you're subscribed to the YouTube channel if you aren't already, so you can hit that subscribe button. The archive will be out here, and if you want to share it with anybody else as well, obviously. And thanks for participating in our polling questions and in the chat and all that. We really do value what you think and how we can make this experience better for you. So please let us know, drop us an email, all that kind of good stuff. But I guess until next week, have a great week, and thank you for watching.